Everybody, this is Lara with your weekly video for gold for the week ending Friday 31st of March 2023. An inside for week for gold, sideways movement leaves the wave counts essentially the same. The preferred wave count is still bearish, but if your own analysis is bullish, use the bullish Elliott wave count, and I've got a main and an alternate for that as well. Use that for your roadmap. Within the bear market, primary 2 could be over at the last high. The next midterm target for downward movement is calculated at 1385.27. The target at cycle degree 1037 and the final target at super cycle degree 657. But for the bearish count, it's possible primary 2 might need one final high to a target at 2019 before it's over. The bullish wave count, if that's your own analysis, then use this one. That expects the next bull run has begun, midterm target at 2362. This is the bearish Elliott wave count. It expects a bear market is continuing for supercycle C to end grand supercycle wave 4. Supercycle C subdividing as an impulse with cycle wave 1 over here, cycle 2 over here, and cycle 3 beginning. Cycle 3 would reach 2.618, the length of cycle 1 at 1037. Within cycle 3, primary wave 1 over at this low and primary wave 2 could be a complete zigzag. I have a main wave count on the daily chart that sees primary 2 over here, and an alternate sees it having one final high to 2019 before it's over. So draw this channel around primary 2. From this low to this low, place a copy up on this high, perfectly fine resistance on these 3 weekly candlesticks as well. When this channel is breached by downward movement, then we can have a lot of confidence that primary 2 is over. If it continues higher, primary 2 may not move beyond the start of 1 above 2065.89. Let's look at the first daily chart. We're going to look from the low of minor 2 here. This point down here, here's the end of intermediate A, a zigzag for intermediate B. Intermediate C fits really nicely as a 5-wave impulse. 1, 2, 3, 4, 5. This first daily chart has a better fit than the next one we're going to look at. And so if primary 2 is over there, then within primary wave 3, minor wave 1 may be incomplete with minute 1 and 2. If minute 2 continues further, it may not move beyond the start of 1 above 2007.32. These confidence points are swing lows. If we see a new price point below here, 1936.18, we can have first confidence. A new swing low below this point, 1859.26, further confidence, and a breach of the channel on the daily chart with a red daily candlestick below and not touching this trend line would add a lot of confidence to this daily wave count, or at least the idea that this high is in place. Alternatively, it's possible that primary wave 2 may be only almost complete within intermediate C, 1, 2, instead of 1, 2, 3, 4, 5 over here, 1, 2, 3, triangle for 4, and a final 5th wave. The proportion isn't great here between 2 and 4, and 3 doesn't have as good a look. So the first daily chart for the bearish count has a better look. This one doesn't have quite as good a look. The target remains the same at 2019. Intermediate C would reach 0.618, the length of intermediate A. Minor 4 may not move into wave 1 price territory below 1859.26, and the channel is the same. This is the bullish wave count. It considers the bear market over in December 2015 and a bull market, a secular bull market, to continue for many years yet from that point. The first huge 5 up is labelled super cycle wave 1, and it's subdividing as an impulse. Within super cycle wave 1, here's the end of cycle 3 and 4 and the start of cycle 5. I'll label primary 1 incomplete. Within it, intermediate 1 could be complete over here. Intermediate 2 could be over here, but I have an alternate that sees it continuing as an expanded flat. It may not move beyond the start of 1 below 1616.14. Let's take a look at the first daily chart, where the high of intermediate wave 1 here is this point here. So here we're seeing intermediate wave 2 over here, but it's relatively brief and relatively shallow, so we have to consider it could continue further. If it's over here, then intermediate 3 would have begun, and a target for intermediate 3 is for it to reach 1.618, the length of intermediate 1, at 2362. Intermediate 3 may only subdivide as an impulse. Minor 1 could be over here. Minor 2 could continue lower. Support at the 0.618 Fibonacci ratio of minor 1 would be expected, 1883.60, or if it's time consuming enough, that may see it find support at the lower edge of the channel. Minor 2 may not move beyond the start of 1 below 1807.12. Alternatively, if we move the degree of labelling in this zigzag down 1 degree, then that could only be wave A of an expanded flat for intermediate 2. It's possible intermediate 2 might not be complete. It may not move beyond the start of 1 below 1616.14. That's why that's the final invalidation point for the bullish wave count at this stage. So if intermediate 2 is an expanded flat, it's labelled minor A, B, C, subdividing 3, 3, 5. Minor B could be an incomplete zigzag. A, B, C, the triangle could be a little B wave. Minor B could continue higher and would still be within normal range for a B wave of a flat from 1 to 1.38, the length of wave A, giving it a range from 1958.83 to 2052.59. When B is over, then we would be able to use the Fibonacci ratio between A and C to calculate a target for C. For now, all we can say for a target for C is for an expanded flat, it should move substantially below the end of A at this point back here. On the weekly chart, last week completed a really small range body with a long-legged doji almost, with long upper and lower wicks. This week the same, price is just moving sideways. If this week had completed a red candlestick, we would have had an evening star, but that hasn't happened, so there is no bearish reversal pattern now at this high. We just have two little stars, which just represents a pause, and a decline in volume as price moves sideways. Really isn't telling us anything bullish or bearish, but this looks more like a pause rather than a trend change at this stage. No signal from on-balance volume. On the weekly time frame, ADX tells us there's an upward trend in a relatively early stages, and RSI is not overbought, so there's quite a long way to go before this trend would be in danger territory. Money flow also not overbought, stochastics entering overbought, and ATR showing an increase as price moves higher. At the high on the daily chart level, we do have an evening star, and this high here remains intact, so this bearish reversal pattern does remain valid. Price now moving sideways, so not much follow through from this, well, no follow through from the strong downward session here. At the last high, there was some bearish divergence between price and RSI and money flow and RSI, and the upward trend has just reached extreme. Now this could develop further, so that's why I've got that alternate bearish wave count and that target at 2019, which isn't too far above. But it's also possible that the high could be in place here. There's a little bit of technical evidence here on the daily chart. It could continue further though. We could see further bearish divergence, and ADX could reach further extreme before the trend is over. Sometimes we have to be a little bit patient with gold. As price was moving higher here, volume was declining toward the high. Now price is moving sideways, volume continues to decline. That's normal for a consolidation and a triangle. No signal from on-balance volume, but watch the weak range here next week. A break above resistance would be bullish, below support would be bearish. We've been over ADX, RSI, and money flow. Stochastics also overbought. ATR declining as price moves sideways. There is weakness in this movement here. This looks like a consolidation. It could be flag or pennant, could be a little pennant pattern actually, and those are reliable continuation patterns. So I'll calculate a target for that pennant, which I should have noted on this chart, and I'll put that target for you in comments below. So if we see a break above the upper edge of the pennant, draw it from this trend line here to here, then that would be an upward breakout, and then we can use the target. It'll probably be a lot higher than the Elliott wave target. That's it from me with your gold analysis this week. I hope everyone's looking forward to an awesome weekend.